Hi there, welcome to Kneppy Invest. Time for another viewer-suggested financial year 23 video. And in today's video, I'm going to be discussing Alcidion, a company I have owned in the past. And this company has been quite favored among small cap investors because of the potential of the company. So Alcidion is a healthcare technology company that provides leading software solutions to hospitals and healthcare providers. They offer a range of products and services that aim to improve the safety, efficiency, and quality of patient care. Now, to be honest with you, when it comes to Alcidion, I actually prefer to look and focus on their quarterly reports or their Appendix 4Cs. So this is one of those companies on the ASX that not only releases half-year and full-year results, also releases quarterly results. And the reason I tend to focus on quarterly results for this company is because they're not yet profitable, and I'm waiting for this company to hit that really important inflection point of becoming operating cash flow and free cash flow positive on a consistent basis. And Alcidion just hasn't got to that point just yet. The next 5 companies I plan to do in this particular series are Perpetual, EZZ Life Sciences, BHP, and eCargo. Now, Elders was third on the to-do list, but the other day when I started preparing the slide deck for that particular company, I realized they did not release or have not released their financial year 23 results just yet. They released their results in May and November, half-year results in May, full-year results in November. So we should have results, the financial year 23 results for Elders in the next month or so. So when Elders do release their November or their financial year 23 results in November, that's when I'll do a financial year 23 result video on that company. Now to the financial results for Alcidion, and revenue 40.4 million. So nothing to complain there, particularly because it is growing, up 18% from financial year 22. We'll have a closer look at the revenue growth for this company. And when I am researching any company, the first thing I always look at is revenue, and I want to see revenue growing. That's actually a really good sign that a company is or can grow in the future, not necessarily absolute, but you want to see revenue growing, because if a company can't grow their revenue, the only way they can grow their profit is by either increasing their margins, which is not sustainable for the long term, or decreasing their costs, which is not sustainable for the long term. Increasing revenue is sustainable for a long term. Now, technically, a company can increase their revenue for 100,000, 10,000, 1 million years if they're successful with what they're doing. So that's one of the reasons why I always look at revenue and revenue growth for a company. And in my opinion, if a company can't grow the revenue, it is not a high quality company. Now, just because a company can increase their revenue year on year doesn't mean it is necessarily a high quality company. There's other factors you've got to take into account, which I might talk about later in this video. But this company has revenue, and that is an important thing. And again, that revenue is growing, but they are loss making. In fact, they had a loss of $4.2 million in financial year 23. Now, because this company is a software company, they have high gross margins, 86.1%. I fully expect and would hope that gross margins could and should get above 90%, particularly when this company becomes profitable on a continuing basis. Now, the thing I will always look at for these type of companies that are loss-making, that are growing, releasing their Appendix 4Cs every single quarter, is the operating cash flow and free cash flow position of the company. And Alcidion is close to becoming operating cash flow and free cash flow positive on a continuing basis. But in this particular financial year, they were still negative by small amounts. $500,000 operating cash flow loss or outflow, and $900,000 free cash flow or free cash outflow. Another important thing about in regards to companies like this that are burning through cash is a cash on hand. Now, the first thing I want to see is not a lot of debt. I don't want to see a company like Alcidion to be or to have net debt, in particularly high net debt. But Alcidion has $14.6 million of net cash. So even though they are burning through a little bit of money each and every quarter or each and every year, they definitely have enough cash to sustain the business for the long term, unless they decide to burn through a lot of cash for whatever particular reason. Another thing I look at for every company I'm doing research on is equity. $90.2 million of equity for this company, which has decreased from last year, but that's understandable because this company is loss-making. Now, if you do some quick calculations, for a company like Alcidion, I'd expect the return on equity to be about 20, roughly 20, we'll say, which means if they had equity of 90.2 million, that means this company could expect profit of $18 million. Now, that's assuming many things. So that's the potential of Alcidion right now if they were profitable and were efficient enough company. But they're not at that stage just yet because they're not profitable and they're still burning through cash. So return on equity and return on invested capital are both negative. Now, remember I said one of the things I look for when I am evaluating the quality of a company is revenue growth. The other thing I look for is return on equity and return on invested capital. So if a company has negative return on equity and return on invested capital, straight away, that is not a high quality company. So I need that revenue growth. I need a really good return on equity. So I'm looking for at least above 10, preferably above 15, and at least above 10 return on invested capital. And of course, Alcidion negative for both of those. Shares on issue, 1.27 billion. Now, I am fairly confident that Alcidion won't have to do many capital raisings in the future unless they make some big acquisitions, which is always possible for a company like this. So I don't expect shares on issue to substantially increase from here. So not much more dilution for shareholders, I would suspect. And the market cap of this company is 140 million. Now, I could be mistaken, but if I remember correctly, back in 2020, 2021, this company almost had a market cap of about $400 million, or maybe it was above $400 million, because there was a lot of hype in this company a few years ago. And the reason there's a lot of hype in this company is just because of the potential. And the main thing this company has to prove, and the management have to prove, is a realization of that potential. And that potential on an equity of 90.2 million is profits approaching $20 million a year. And if they can get that, a market cap of $140 million is pretty good. That looks pretty low. So I think the market is a little bit wary about Alcidion, that they can achieve their potential just now with a market cap of 140 million. And yes, profitable, 0. So this company needs to show they can become profitable and operating cash flow and free cash flow positive on a continuing basis. Because if this company can't prove that they can become profitable or free cash flow positive, then the true valuation of this company is 0. Now to the valuation of Alcidion. Is this company good value or bad value right now? And to be honest with you, trying to determine the valuation of a company like Alcidion is fairly pointless, useless, because this company is not profitable. Not only is this company not profitable, they're not generating any cash flow in their operations or any free cash flow either. So a lot of my favored valuation metrics like P ratio, EV to operating cash flow, EV to EBIT, they're not going to be useful in this endeavor. Maybe the only valuation metric you might be able to use is price to sales ratio, and that's at 3.5, which isn't too stretched for a company like this. So when it comes to Alcidion, it's all about understanding the future potential of this company. And there is a lot of risk there. But if this company can achieve their potential, right now there might be some really good value in this company. But the question moving forward is whether this company and their management can achieve that potential. Now it's something I like to look at for all companies, and that is the history of revenue, profit, free cash flow, and even gross margins. And the first thing I look for here is revenue. I want to see revenue growing. And the good thing about Alcidion is revenue has been growing over the past 6 years, from $4.2 million in 2018 to $40.4 million in the most recent financial year. Now, one of the reasons revenue has been growing is because this company is quite acquisitive, which means they do make a few acquisitions, but there is still some organic growth there. But even though revenue is growing, if you take a look at profit and free cash flow, both of those are going nowhere. They're just going sideways. So I want to see some scale here. What I mean by scale is I want to see revenue growing, and at the same time, I don't want to see costs growing at the same rate. That scale. When a company hits scale and they can grow their revenue at a greater rate than their spending, that's when a company has made it, particularly if that company is profitable. So that's what I want to see from Alcidion moving forward. I want to see this company continue to grow their revenue, but I want to see that revenue growing at a quicker rate than their spending. They haven't quite reached that point just yet. You can see the profit has been as low or as high as $8,000 or $80,000 back in 2019. So this company was almost profitable in 2019. And in fact, in 2019, this company was free cash flow positive by 1.7 million. And a few years, they have been free cash flow positive, 1.23 million in 2021 and $700,000 in 2022. The other thing I've mentioned is I want to see this company being free cash flow positive on a consistent basis. And they haven't reached that point just yet. Now to the charts for Alcidion. I'm going to show you two charts for the company, a weekly chart here, which goes back to 2014. And then in the next slide, I'll show you the daily chart. I do like to look at different timeframes over like a 10, 20-year period, dailies, weeklies, monthly charts as well. You can get different vibes when you look at these different charts. So in this particular weekly chart, the thing that really stands out to me is those three mountains. So at times during Alcidion's recent past, going back to 2015, there has been a hype cycle in this company. The first one was 2016, when the share price went from about 3.5 cents, maybe even 3 cents, to a high of 14 cents. The second hype cycle phase for this company was back in 2019, when the share price went from 4 cents to 30 cents, almost an 8-bagger in a short period of time. Talk about 6 or 8 months. And the third hype period for this company was 2021, when the share price went from 12 cents to a high of 48 cents in the middle of 2021, which was the all-time high share price for this company. The other thing to notice here is in the first two hype cycles for this company, it was coinciding with really high volume. But in the third hype cycle, we didn't see that high volume. That was in 2021. There was persistent okay volume, but we didn't see a peak in volume, definitely compared to 2016. And since that high in the share price from the middle of 2021 to now, share price has fallen 75%. So yeah, the market cap of this company was more than likely above 400 million, unless they've highly diluted shareholders with capital raising since then. I think I'm pretty sure I'm remembering right. Now, as we turn our attention to the daily chart, you'll notice there is a horizontal dashed line, and that is a fairly significant support zone for this company. And the share price of Alcidion is just above that support zone. So if I see the share price fall below this zone, that will be fairly bearish. As we turn our attention to the daily chart for Alcidion, there's a few noticeable things here. The first really noticeable thing is that Alcidion is still in a long-term downtrend. And we know it's a long-term downtrend because the longer-term moving averages are going down, which is portrayed by that top moving average ribbon shaded in red with that blue, that's dark blue, maybe not dark blue, but that blue line through it, which is a 150-day moving average. Not only that, that long-term moving average zone is a resistance zone for this company, because every single time the share price of this company since August last year gets into that zone, the share price falters and pulls back. And the share price has been in that zone or near that zone since August of this year. And over the last 2 days, we actually seen the share price pull back again. So the share price of this company is struggling, really struggling to get above that long-term moving average zone. Now, if we turn our attention now to the shorter or medium-term moving average ribbons, we can see there have been times in the past 14 months or so that the short to medium-term sentiment in this company changes from negative to either positive or neutral. We saw it between August and December of last year, and also between August and now of this year. Now, the share price of Alcidion has struggled in the last few trading days. I'm recording this video at about 4 p.m. on October the 17th, and the share price of this company today closed at about 10 cents with a low at 9.5 cents. And the reason 9.5 cents is important, or even 10 cents is important, is because The really good and significant support zone for this company is around about 9 to 10 cents. So over the past 14 months, when the share price gets below 10 cents, you do see some support. And we did see some support between May and July of this year before the share price rallied. So what we have here is the share price, the resistance zone, which is the long-term moving average, is moving towards the support zone. So that could be quite significant moving forward for Alcidion. Now, which way the share price breaks when these two zones meet up, who knows? If it breaks upwards, that will be a good sign, a bullish sign, but the share price moves downward, that will be a bearish sign. So I am looking forward to seeing what happens when these two zones hit each other, which might be within the next 3 to 6 months. That's all I have for this look at Alcidion's financial year 23 results. If you have any questions about this company, or maybe you're significantly more bullish than I am about Alcidion, you believe in the future of this company, I'd love to hear your opinion. So leave your thoughts in the comment section of this video. Otherwise, if you're completely bearish about this company, I'd love to hear your opinion as well. So do likewise. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.